Hey everybody, Dave Bartosiak with Trending Stocks at Zacks.com. Being a gold bug is so 20th century. Yeah, it's shiny. You can make yourself a grill. You can get a 36-inch chain and swing it around your neck. But can you power a submarine with it? I don't think so. Enter 2021, the era of uranium. That's right, folks. The commodity used to fuel nuclear power plants has surged to its highest levels since 2014, and a new Cold War is not the reason for the spike. Part of the reason is on the demand side, coming from a fund that's been aggressively buying up the physical uranium market. Earlier this year, investment firm Sprott, ticker SII, launched its physical uranium trust. According to the company, the firm has managed to stockpile over 24 million pounds of uranium. Compare this pile of the physical commodity to the spot market, where something like 92.2 million pounds traded during the entire year 2020. Today, uranium futures are trading around $40.25 a pound, up from the March 2020 lows in the high 20s. The move in the underlying commodity has helped stocks and companies related to the industry. The global X Uranium Etf, ticker URA, has been on fire lately. The ETF is up over 58% year to date and 106% over the last 12 months. With this frenzy on the move, which stocks within this industry are in the good graces of our Zacks rank? Let's go ahead and explore some of the URA holdings on Zacks.com to find out. All you got to do is go to Zacks.com and type in URA and up here in the quote box, search, and you'll get this sort of page with the global X Uranium ETF URA. It has a Zacks. Sometimes, most times, you'll have a Zacks ETF rank. Sometimes there's not enough data from analysts to give us that, so that's where we're at on that. But what you want to do is don't worry about the profile part here. Go to holdings, and that will uncover, guess what? The holdings inside of it. So rather than have you have to go through these one by one, since I love everybody, I went ahead and did all of the legwork. And if you notice, when you see these numbers of basically like QSIPs or tickers here, these are going to be stocks and companies that are not traded here in the US. So you do get a little bit of international exposure when you're in this ETF. So I took a few of these names out so we can look at them sort of one by one. So the first ticker, URG, which is UR Energy. Right off the bat, we're not going to be a big fan of this. Zacks rank number 5, strong sell. Value style scores of F, growth D, momentum B. To help it round out with a VGM composite score of F. In terms of Zacks rankiness, this is not what you want to see, my friends. Plus, the mining miscellaneous industry is in the bottom 9% of our Zacks industry rank. So why does Zacks hate this? We don't hate it, but why is it not in the good graces of our Zacks rank? And if you look, I mean, growth numbers are astronomical. Current year sales growth going from 19% up to 379%. EPS is supposed to go from the 44% growth to 240% growth next year. Now, remember, these numbers are kind of small, right? If you're going from a 5-cent loss to a 7-cent gain, is that really all that dramatic? Maybe not. But here it is. It's the move in the estimates. So if you look at current year estimates, the loss is widening from a 2-cent loss to a 5-cent loss. Next year's number goes from 8 cents down to 7 cents. So it's that contraction that the Zacks rank doesn't like. On to the next one. Uranium Energy Corp. Now here you get a Zacks rank number 3 hold. These style scores, F for value, F for growth, D for momentum. Also an F on the VGM composite. Not exactly what you want to see. So in terms of a 3, this is weaker on the 3 side. And we don't have a ton of data. A lot of these companies are very small, so we're not going to have them. So whenever you see NA, that just means that the analysts that we've surveyed don't really have these numbers out there yet. So take that, be that as it may. Let's just look at already 9-cent loss has been basically priced in there. It's not going to go anywhere at 2 cents for next year. So this one kind of lands with a little bit of a thud. Then you have Next Gen Energy. This is the Zacks rank number 4 sell, D for value, B for growth, and D for momentum to help it round out with that C in the VGM composite. And again, let's look at the detailed estimates, see what's going on here. Again, we're getting spotty data on a lot of these, and this is what you can expect from these smaller companies, right? Because they just simply don't have the analyst coverage. And lots of Zacks ranked number 3s tend to fall in this range just because, again, we don't have the data. So they're not going to look terrible. They're not going to look great. They end up being right in the middle. But one thing to look at, you do get some decent growth here heading into next year. But look at that nasty contraction this year. So a lot of risk here, maybe not the reward. Now, what if instead of looking at just a uranium producer, what if we get a company that's a little bit more, diversified maybe? Here with BHP, still strong sell. The value, the style scores look a lot better with an A for value, A for growth, A for momentum, BGM composite score of A. But that and $1 will get you on the bus, my friends, because this is, like I said, still a strong sell. Current year revenue growth looks great, but that's going to contract. Never when you want to see. Current year EPS growth looks great. Again, contraction, not what I want to see. Now, I can't just leave you hanging with a bunch of stocks that are going nowhere. How about a Zacks ranked number 1 strong buy here for Centrus Energy Corp? They are in the business of enriched uranium. That's what I'm talking about. Get that into those power plants. Zacks ranked number 1 strong buy. B for value, C for growth, C for momentum. Help around out with a VGM composite score of B. Now, they are in the mining non-ferrous industry also. That ranks in the bottom 30% of our Zacks industry rank. But let's take a look and see what makes this a little bit better than the others. Current year, a little bit of a contraction in the sales numbers. That's supposed to expand by 13% next year. That's a good thing. A nasty year here for the current year. 64% contraction in EPS. Next year, it's going to expand by 113%. So that's a good thing for next year. That's why it is a Zacks rank number 1 strong buy right now, trading around $31 a share. And you can see here on this chart, it's had a little bit of a move here since late August, where we get a little bit of a rally in the stock. Every time you share this video, somebody uses a pound of uranium to power a nuclear power plant instead of a nuclear warhead. Follow the author, subscribe to the YouTube channel, Twitter @Bartosiastics, and check out Zacks.com/promo for this week's deal on Value Investor. See you next time with trending stocks at Zacks.com. I'm Dave Bartosiak.